WeMasterTrade. WeCopyTrade. WeCopyTrade.
Good day to everyone joining us from around the world, whether you are just waking up midway through your trading session or winding down the night, welcome. So on behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. My name is Aidan and I'll be guiding you through this exciting 2-hour journey with your host. So today's live stream is not just a presentation, but it's more like a conversation. So it went into the engine room of one of the most fast-growing and forward-thinking funded trading communities in the industry. And of course, I'm not here alone. I'm joined by two remarkable guests who are here to help shape what WeMasterTrade represent today. So skilled traders, mentors and role models within our community. So first, let me introduce the ever-composed, always insightful Helen. Welcome, Helen.
Thank you so much, Aidan. Hello, everyone, and thank you for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about trading strategies or rules, but about the full ecosystem that we can offer, from how you start, how you grow, and how to learn. This is a kind of the platform that doesn't just fund trade, it's new trader.
Absolutely, and next to her is someone who brings sharp analysis and clarity to every chart and conversation. He's a strategic, sharp, and he's a real force in our trading space. So welcome, Ralph.
Thank you, Alan, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is that we are going to unpack everything. Not just what WeMasterTrade offers, but how traders can truly take advantage of each part of our system, from packages to promotions to scaling and long-term profit sharing. If you ever had questions or even doubts, today is the day to ask them.
That's exactly what we're here for, whether you're brand new to WeMasterTrade or it's already a part of our funded trader program. So today's live stream is going to give you the full picture, not just the headline reel over the course of the session. So we are going to walk you through what WeMasterTrade truly is, what we believe in, and how our programs are designed, and why we're doing it differently from our traditional brokers or platforms. So I want to be clear, this isn't just about sales, but it's about understanding that we want to know what you're signing up for. So what kind of structure support your journeys, and how you can use that structure to not succeed, but scale.
And speaking of structures, we begin by sharing the story behind WeMasterTrade, how we were formed as a funding project, not a broker, which is a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly, and from that beautiful field flow, everything we offer, especially our trading packages, which we are discussing in detail, we will explain the logic behind each one, what kind of trader they stand for, and how the structure changes depending on whether you choose the giant model or instant funding model. And if you ever look at our packages and talk, which one is right for me? Today we will answer that.
And more than that, we also do a light comparison between packages. We'll break down pricings, account size, maximum drawdowns, consistency rules, and even payouts side by side to help you make a fully informed decision. So it's one thing to see numbers on a website, but it's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is always how do I stay confident while trading? So we move naturally into discussing trading rules, which honestly is one of the most important parts of today's section. We will explain what the time loss limit is, how it's calculated, why it includes both closed and floating BNL, and how to avoid violating it, especially overnight. We go into the maximum total loss, the consistency ratio, and we even address common misunderstandings about the trade sizing and reasonable trade policies.
And we won't just explain rule in isolation. We will explain them in the context of live trading decisions. I will share some personal example of mistakes I made when I first started trading. I started trading under funded conditions and how I adjusted because rules aren't meant to restrict you. They're to protect the integrity of your growth.
And while we're on the topic of helping you succeed, we'll be guiding you through our current promotion plan, including limited discount codes, trader support campaigns, bonus capital opportunities, and how to properly qualify and submit proof. So we've had some amazing responses to our promotions, but also some confusion, so we'll be showing you exactly what to do step by step.
From there, we will transition into a discussion on our scale plan, which I personally think is one of the most underrated parts of WeMasterTrade's offering. Many people don't realize this, but we have a structured growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock high capital tiers. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit share model. This is the heart of what makes us different from broad firms. When you trade on a funded account and generate profit without breaking the rule, we share that profit with you up to the 90%. But there's more to it than just the percentage. We will explain the full payout circle, threshold, and timeline today.
Now, I know many of you watching today aren't just traders, you're also educators and influencers of people with large networks. So that's why we're also taking the time to explain our affiliate program, and we'll do it transparently. So we'll walk you through how commissions are calculated and how affiliate referrals are tracked, and more importantly, what you need to qualify for payout, including a detailed explanations of the two referee rules and minimum bonding condition.
This is especially important because we want all our partners to feel confident and clear about their earnings. We've seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the terms, and building long-term income streams.
So to wrap up this welcome, I'd like to say that WeMasterTrade is not just a platform, it's a commitment to build real traders, to create fast structures and scalable pathway for people around the world who are serious about trading as a profession, not a game. So if you feel to grow, to understand and to take action, you're exactly where you need to be, and let's dive into the journey together. So let's begin, and once again, welcome to the WeMasterTrade live stream. Okay, so thank you for being with us today. Now before we dive into packages, trading rules and promotional mechanics, we want to take a moment to zoom out and offer you the full pictures of who WeMasterTrade really is, what we truly believe in, and why don't we build this platform the way we have, because when you're putting your trust in and you're trading into a company, understand that philosophy isn't just helpful, it's essential. And so this segment is about origin, intentions and impact. So it's about how WeMasterTrade began and what values underpin the firm and how those values translate into real tools and real outcomes for traders like you. To work through that, I'm joined as always by two people live and break these principles, Alan and Ralph. So let's start at the beginning.
Obtain Aiden to truly understand WeMasterTrade, or you need to understand why it's created. Unlike a broad firm or broker that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give a capable trader access to the capital, regardless of their background, location, and financial situation. We were founded in 2022 as a part of WeMasterTrade Group, headquartered in Vancouver, Canada. While WeMasterTrade built its name in a signal sharing, internet network, and copy trading tech, WeMasterTrade were designed to serve more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to note that WeMasterTrade is not broker. That's not just a label, it's a fundamental difference. We don't profit from spreads or commissions. Our success is directly tied to the success of our traders. That's why everything we build, from our instant funding packages to our profit sharing models, is structured with alignment in mind. We take on the capital risk, we give you the roadmap, and you bring the skill. But we also know that skill alone isn't enough, which is why one of our founding principles is education first. We don't want traders to blindly follow the rules, we want them to understand the logic behind the structures. That's why we've invested heavily into WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
That academy is something special, where the courses ranging from introductory trading psychology all the way to advanced risk calibration and multi-asset trading strategy. So WeMasterTrade Academy isn't just about theory, but it's about implementation. So we have designed the curriculum to match the real-world trading environment within WeMasterTrade. So what you learn, you can apply directly to your funding account. And to ensure that our system global standards, WeMasterTrade is proud to hold an ISO 21001 2018 certification, which confirms that our educational products and traders development program meets rigorous international criteria for quality, structure, and learning engagement.
That certification is a big deal because it shows our long-term commitment to developing traders, not just collecting fees. In an industry where many so-called problems come and go, WeMasterTrade had a position itself as real operational stability, compliance framework, and internal accountability. We were not here for a reason. We were to help build a career.
And we've seen that commitments translate into real stories. If you visit our testimonial page, you'll find traders from Nigeria, Vietnam, Canada, and Philippines, South Africa, all talking about how WeMasterTrade help them not just earn money, but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. We have students become full-time traders, we have women re-enter the finance world after career breaks, and we had young professionals from underbanked regions finally access the market with a funding account. That's the impact, and that's what drives us.
So it doesn't stop there. The WeMasterTrade is a system. It is designed to grow with you. So for those who want to stay engaged and stay up to date, we maintain a regulatory updated blog section where our team of experts and educators share weekly insight, trading psychology breakdown, market reactions, and platform updates. So we believe that learning never ends, and we keep our trader informed. But let's talk about culture. So what makes WeMasterTrade different isn't just the product it is offering, it's a community mindset. We actively promote trader integrity, respect for competition, and knowledge sharing. So whether you're in a Telegram group, watching our YouTube series, or engage with us on live support, you see that we actually listen.
And I will speak honestly here. It means far from trader is just a customer. As we met the trader is the product. Your performance drives the business. Your voice shapes the platform, and your consistency determines how far we can scale together. That mutual accountability era, and it's sometimes we brought up.
And if you ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonial, take a look at our funded accounts, and connect with people who've gone through the system. The stories are real, the capital is real, the results speak for themselves.
So to put everything together, WeMasterTrade is a capital allocator, a talent accelerator, and an education-first trading institution. So we are here to challenge the status quo of trading access, to build systems that reward performance over promotions, and to create real scalable income opportunities for traders around the world, regardless of their starting points. And this is more than a platform, it's a trading movement. And if you're here to be part of it, today LiveStream will show you everything you need to know. So thank you, Hala and Ra, for that deep and honest walkthrough. So coming up next, we are going to take these foundations and connect it directly to our actual offering. So that means we'll be discussing all the different packages available at WeMasterTrade, how they differ, who they're designed for, and what kind of results you can expect it from each. So stay with it, it's about to get even more exciting. Welcome once again to the WeMasterTrade official live stream. Okay, so it's time to move into one of the most essential parts of this live stream, an in-depth discussion of our account packages. So this is where it all begins from most traders choosing the structures that best align with their goals, their style, and their current skill level. And when we say packages, we're not just talking about dollar figures, we're talking about framework. And each package at WeMasterTrade represents a different pathway toward growth. And today we'll walk you through all of them, what they offer, how they're structured, and most importantly, who they're designed for.
Exactly, Aiden. At the WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we moved to distinguish the life for trader. The challenge packet and the instant funding packet equally include a variety of account size and configuration because we know that traders come with a different strength, risk appetite, and timeline.
Let's begin with the challenge model, a true phase evaluation system built for traders who want to prove their skill before being allocated capital. It structures fair and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulated account and your goal is to meet specific profit targets while staying within strict but reasonable risk parameter. There are 3 stages in total, phase 1, phase 2, and then a funded stage.
So take, for instance, our 10,000 challenge. So it's a great starting point for traders who want to minimize offering costs while building a track record. So let's break it down phase by phase.
In phase 1, you will need to adjust an 8% profit target, which is $800 without reaching a 5% daily drawdown, which is $500 or a 10% overall loss limit, which is $1,000. You will have unlimited time to achieve that. That's a key difference from many prop firms. We don't pressure you with the deadline.
So once you pass phase 1, you will move to phase 2, where your profit target drops to 6%. That's $600. The risk will remain the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
And finally, once both phases are clear, you can enter the funded account where you try with the real capital, have no profit target, and your profit share jump up to the 90%. That's one of the highest in the industry.
So this account is ideal for newer traders or experienced traders who want to start with lower pressures and learn the system. If you're still refining your strategies or want to get a feel for WeMasterTrade risk framework before scaling, this is the perfect pocket to begin with.
So now for those who are confident with their strategies and want to start with largest account size, so we offer $25,000, $50,000 and $100,000 challenge packages. So the structures is actually similar. Two phrases, the same 5% daily loss, 10% total loss, but the profit targets scale proportionally.
For example, in the $50,000 challenge, you will need to hit the $4,000 in phase 1 and $3,000 in the phase 2. While the targets are higher, the leverage remains the same 100, giving you room to adjust position sizing.
The $25,000 to $100,000 challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funding accounts. If you already passed other broad challenges or have a strong verified trading history, this is a good step up.
So every challenge packages comes with a one-time fee. For example, it's just $40 for the 10K challenge. So this fee is actually refundable once you become funded and meet minimum performance conditions. But what happens if things don't go your way? So you are eligible for a 30% discount to start fresh. And what if you don't want to go through the channel at all? You but instead want to access your real capital immediately. They get paid based purely on results, and that's where our instant funding packages come into play.
And this is where WeMasterTrade truly sets itself apart. Our instant funding model is designed to give experienced disciplined traders the chance to trade real capital from day one. No evaluations, no demo stages, just pure live trading backed by a structured, fair, and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, preferences, and goals. Today we're going to walk you through 8 of the 5 main instant funding packages: a standard, 51010, 510 euro, 51010 novice, and customized. We will compare the detail, but more importantly, we will help you figure out which package is right for you.
So let me set the scene quickly. So all of our instant funding packages give you live trading access from day one. That means no challenge phases, no evaluations. You pay one, follow the rules, and you're trading live capital. And every account, no matter size, includes no time limit, up to 90% profit share, balance rate, plus a scale plan toward 1 million in support for expert advisory, swing trades, scalping, and even HFT. So now let's go packages by packages. So we go hand and graph. I want you to jump in with few advice. Who should actually choose this one, and what kind of trades you've succeeded with each?
Let's start with the standard package. I always describe this one as a background for trader who want stability. You are getting up to the $200,000 in capital with a very manageable 4% daily loss and 6% overall drawdown.
It's like that calm, steady account that doesn't push you to overtrade. And with the profit split up to 90%, there's serious earning potential even if you are taking a slow and steady approach.
And what about commissions?
Competitive overall to both the forward at the $4 per lot, grow at the $40 per lot, index at the $1 and stop at just the 0.075 per lot.
And everything is allowed. News trading, scabbing, weekend holdings, EAs, HFT, you name it.
So for the audience, if you're someone who trades regularly, understand your strategies and wants a full range of assets, and plan to play the long game, this is your sweet spot.
It's perfect for intermediate to advanced traders who already know their edge but don't want to stress with a target-based challenge. And if you ever had an account blow due to unrealistic rules, you will find the standard model refreshingly fair.
I can also say that service as swing trader, the more 6% will find just here, flexibility to how multiple day reason, especially when the weekend holding fully allowed.
So let's move another gear. Let's talk about the 5-10-10 package. It's the same capital ceiling up to 200,000, but you get a 5% daily loss and a wider 10% overall limit. So why does that matter?
Well, the execution is massive for traders who scale into positions or take multiple entries per setup. You got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, which align well with the red window. Plus, you still got full support for scalping. Here is new trading and very trader friendly.
And the question is who is for. This is best for day traders, especially those trading assets like NASDAQ or gold that move fast. If you got a tested intraday strategies and just need some risk breathing room, this is your package.
And also for trader who want structure but don't mind having that profit target. The trading news though motivate some people, especially if they pay out all the time.
Now it is a personal favorite, the 5-10-0. You get 5% dailies and 10% overall loss, but no profit target, none, zero.
And that wasn't for high resistant trader. You are no longer chasing a number, you just focus on quality, equity, and growing capital slowly and station.
This one is up by low frequency traders and snipers. If you enter 3 to 5 trades a week, this is your space. You are not penalized for patience, you are actually rewarded for it.
Veteran swing trader, reconsider trader, people who prioritize consistency over speed. If that you will right here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale up cleanly. This is their home.
So now for the rule breakers, or rather those who don't want to be evaluated on how even their profits are, the 5-10-10 new PC removes the profit consistency tracking, right?
Exactly, same 5-10 risk profile, but you are not required to keep your profile growth smooth. One big winning day is totally fine.
That's that. Trade couples are not allowed in this one. So it's for the minor trader only. And you need to try responsibly. But for the aggressive trader who sometimes can lose price, this is the play.
And this package is perfect for high risk reward traders or anyone who's had issues with consistency rules at other platforms. You trade how you want, just keep it inside the drawdown box.
And last but not least, a customized package. So this is WeMasterTrade saying, you know what you need? Let's build it together.
You can adjust daily loss, hourly loss, profit target, and consistency rule to your liking. Plus, you can fund up to the $400,000 more than any other account.
It's premium, flexible, and comes with on-trading style allows, including EA's news trading, weekend holding, HFT, and more. And the package is suitable for top-tier professionals, edge funded traders, signal providers, high-volume traders, anyone with a very specific structure in mind. This package lets you build it.
I always say, if you try other model and nothing quite fast, build your own blueprint with a customize that freedom you want.
So to sum up, every instant funding package we offer comes with clear risk perimeters, fair commissions, a deep market access, and real profit potential. There are no limits, and payouts start as early as one day in.
And no matter your strategy is scalping, swing, or the amount, there are cow key is picking the right one now. You can start building consistency from the start.
And if you're ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dreams. The right fit always outperforms the biggest promise.
Up next, we will be walking you through exactly how to protect your account, avoid breaches, and understand the key risks and consistency rules that power our entire platform. Okay, so let's talk about the part that either makes or breaks your account. That's right, it's time to dig into the trading rules and how to actually stay compliant once you're funded. Because let's be honest, getting funded is exciting, but staying funded, well, that's where the game really begins. And the number one reason traders lose their account, it comes down to one thing, the daily loss limit.
Yes, the dreaded daily loss is the one rule trader thinks they understand until it kicks them out of their account at 3:17 p.m. on a random Tuesday.
But here's the good news. When you understand how it really works, it's become one of your better for rate control. So today, let's break it down from top to bottom.
So, what is the daily loss limit? Also called the maximum daily loss.
It's the maximum amount of loss you're allowed to incur in both floating and flow trades on any single trading day. If you exceed fall below that limit, even for a moment, your account automatically closes.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction, and it's what trips a lot of people up.
So let's work through a live example. Okay, imagine at the start of day 5, your balance is 105,000. Your equity, however, is higher, about 107,000. So because of open floating profit,
And if you are on a 4% daily loss limit, we calculate it of the higher number, $107,000.
So 4% of $107,000 is $4,280. That means your equity for the rest of the day can't drop below $102,720, or boom, the account is gone.
right, and I think it's important to point this out. The system isn't waiting for a close, it's real time. Even if your trade is floating loss and you haven't closed it yet, if your equity dipped below the threshold for even a second, well, that's it.
Now, let's reverse it. Say it's the start of day 7. Your balance is $100,000, but your equity is $99,000 because your open trades are slightly in loss.
Since the balance is higher, we made the 4% on the balance, so the $4,000.
So your equity must stay above 96,000 on a day. If it drops to, well, let's say 95,999, auto liquidation kicks in, namely no margin call.
So what happens if you break it? The system will send a market order to close on trades. Everything liquidate. Your account is disabled and you can't trade again unless you budget a new package.
And here the kicker, the article will happen when the system detects the threshold was crossed, but due to market fluctuation, your final P&L may look worse than the actual threshold. That's because the system is skewed further based on the price they pay at the time of liquidation.
So if you only intended to take, let's say, a 3,900 loss, monthly post, like in gold or Nasdaq, and certainly it's 4,200. Well, that's where we say, don't mind the edge.
Alright, let's talk about how to avoid violating this rule, because this is where the pro mindset kicks in.
First step, know your buffer. Never blame trade to take you right up to the edge of your limits. Leave at least 10 to 50% room below the market roll down, especially in a volatile market.
Tip 2. Check your equity, not just your balance. I can't stress this enough. Most traders stare at their balance all day, but if your floating loss is dragging your equity, you are heading toward a violation.
So, tip 3, use a dashboard or a tracker. Inside WeMasterTrade, we provide 3 dashboards that show your live daily loss out. Use them, check them, don't rely on your memory.
Also, pause trading after the big lot early. If you lost 3% in the first hour of limit session, maybe it's time to stop and replay. Not try to revenge trade your way back up.
Another big one, trade smaller during news hours. If you are trading gold during NSP with full loss sign, you're practically begging to break the die loss rule, cut position size, and ride post volatility.
So, what are the top rookie mistakes you see when it comes to daily loss?
And the number 1 is over leveraging. Trader open position that's at 5-7% of their account, thinking they will grow quickly, but if the trade turns fast, it's already too late.
Number 2, holding overnight without checking exposures. If you hold 3 trades overnight and wake up to a 60 pip gap, the die loss could be hit before you even open your eyes.
And the third, assuming that closed trades are all that matter. If they're not, remember equity includes both floating and closed position. So the total equity line is your score.
I always say that to new trader, the daily loss rule isn't your enemy. If your account ever, it decides to protect you from doing something irreversible.
Exactly, it forces discipline. You can be aggressive, but only within the box. And if you learn to trade inside the box, you will last longer than 90% of the market.
And one last note, this isn't just about rules, it's about trust. And WeMasterTrade funds you because we trust that you will manage risk responsibly. The daily loss is there to protect that trust on both sides. So next up we are going to enter a short break, and after that we're going to continue exploring the other rules and promotions.
Trade. We copy trade.
Welcome back, trader. So in the previous segment, we've covered the daily loss through, and if you haven't already clicked that one, oh, I believe you're missing out. But now we are moving from the daily boundary to the absolute boundary. So I'm talking about the maximum loss through, so also known as your account stop loss, the line that can't be crossed, not just for the day, but for the entire life of your account.
And this is where a lot of traders misunderstand how the rule works. They think, well, I didn't hit my daily loss, so I'm fine. But then a week later, they strip away at their account and suddenly liquidation.
The max loss rule is the last safety net. If the die loss in your dice belt, then the max loss is your airbag. If the limit is hit, it means the account is deemed unsalvageable under your current trajectory and explodes immediately.
So what exactly is the max loss rule? Let's define simply. So it's the total maximum amount you allow to lose. So across all trade for the entire account, if your equity, that is your real-time capital including open trades, ever drop below a certain percentage of your starting balance, your account is gone, period.
And unlike the daily loss, which reset every day, this one doesn't reset. It's cumulative. You can lose 2% one day, 3% next day, and if your total drawdown crosses the line, that's it.
And the percentage limit depends on your package. It's typically either 6% or 10% of your initial balance. Not your equity, not your profit, but the original number you started with.
So let's work through a concrete example. Just suppose you have an instant funding account with an initial balance of 50,000 and your max loss limit is 6%, which is $3,000.
That means your equity can never go below the $47,000 ever. Doesn't matter if you make $1,000 yesterday, the total will roll down from your highest point back down to that threshold. What it matter?
And remember, this rule includes both close losses and floating losses. So if you lost $2,000 in close trade and you have another $1,200 floating in red, your equity is now at $46,800, and that's below the limit. Account is closed.
Just to be clear, it's not about the net gain or loss across the trades. It's about where your equity stands in real time relative to that stop lot floor.
Here's where it gets interesting and a little tricky. Let's say your account roll to the $51,000, correct, you're in profit.
But your max loss limit is still based on your original $50,000 starting balance. So if your limit is 6%, the threshold is still $47,000. What changes is how much room you have to fund before you hit it.
Exactly, you now have 4,000 in total buffer because 50,000 minus 47,000 equals 4,000, so your profit gives you caution. The floor never moves.
So what happens when you break it? Once your equity drops below the maximum loss threshold, even by a few dollars, auto liquidation triggers. On trades are closed immediately at market price.
And again, like the daily loss, if there volatility or slippery, your account might close out below that line. It's just execution reality.
So, most important, once it breached the account is permanently disabled, you need to purchase a new package if you want to continue trading. No resets, no rollbacks.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
At the first, track your total close losses every day. You should always know how close you are to your maximum loss floor. Don't wait for the dashboard warning, calculate it manually.
Second, use your profits as protection, not permission. Don't treat floating profit as a green light to increase risk. Instead, consider locking in gains by reducing loss size when you are hit.
Third, manage your floating loss progressively. Even if you're positive overall, a single trade with poor stop placement can take you from safety to shut down in a few minutes.
And the fourth, stay cool when you're close. If you're down 5% out of your 6% limit, that's not the time to double down. That's the time to step away, pause, and retain your entry.
The biggest mistake, underestimating floating drawdown. Traders close 3 losers and hey, okay, I still got room, but they forget about the 4th trade floating minus $1,800.
And second, traders who chase recover after the bad day, they lose 4% in one day. Commit screening the next day thinking they will make it back and instead take another 2% and boom, violation.
Bro, this one hurts. Ignore and sleep out during major news. Even with a tight stop, newcomers can gap you straight through your limit.
And the max loss rule is there for a reason. It's not there to punish you, it's there to protect you from yourself. Every successful trader I know sees their stop loss, whether personal or institutional, as a non-negotiable boundaries.
Right, it's a reality check. If you consistently brushing up against your max loss, the problem isn't the rule, the problem is your system or your psychology.
At WeMasterTrade, we're not just giving capital, we are teaching structure. And the map also is what separates gamblers from professionals. So remember, your net loss is a percentage of your starting balance, typically 6 or 10%, and it's calculated using equity, not balance, and it includes both close and floating losses. And once reach, your account is gone. So coming up next, we'll be exploring the consistency rules and why steady profit matters more than big spike when it comes to growing, scaling, and getting paid.
If you ever made $5,000 in one day, then made $200 the next 4 days, and wonder why your payout got flat, this next segment is for you.
Let's dive into the rhythm of profitability and how to stay consistent under WeMasterTrade model.
So stay with us. This is a WeMasterTrade live stream where structure meets opportunity. Alright, but now it's time to shift gears just a little and not talk about it, but about results. So because here things is not just about staying alive in the game. At WeMasterTrade, we want to see if traders grow, scale, and can actually earn. So to do that, you need more than just a winning day. You need something called profit consistency.
This rule right here, the profit consistency rule, is what separates a lucky spot from a reliable trader. It's about whether you can make money over time, or if you're just hoping to hit one big winner and roll the day.
And more importantly, it's also how we evaluate if a trader is eligible for withdrawal, profit sharing, and even scale up. So if you're funded and you're wondering why your payout didn't go through, this rule could be the reason.
So let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. So the more balanced your profit, the lower your ratio. So less consistent means you have one giant profit day and then smaller losing day, the higher the ratios.
The idea is simple. If 80% of your total profits come from one day, that's not consistency. That's a lock or risk. What we want to see is the trader who make profit day after day, even if it's more, and that's what we can scale.
The formula is really straightforward. Take your best trading day's profit and divide by your overall profit. Since you started the account, then multiply by 100.
So the best day divide total profit, multiply 100 will equal the profit consistency ratio.
And just to be clear, bad day refers to your highest global profit in a single day calendar day, and total profit is the sum of all your global profits minus any global losses or open losses across the life of the account.
So let's say you had the following results over 5 trading days. In day 1, you get 100 profit. Day 2, 200. Day 3, minus 50. And day 4, 100, and day 5, 60.
That means your total net profit across 5 days is 100 plus 200 minus 50 plus 100 plus 60 equals $410.
And your best day was take 2 and that was in profit.
So now we apply the formula. 200 divided by 410 equal to 0.4878. Multiply that by 100 and you get a profit consistency ratio of 48.78%.
Now let's say your account requires a 20% profit consistency with equipment. This trader is always about that, so they couldn't qualify for the payout yet.
So even though this trade is profitable, if they're not consistent enough, they have one big day that made up, almost half of the total profit. That's not sustainable, and that's what we're looking at, right?
And this is why I really want to speak to trader. If you're relying on one or two big days to carry your entire account, that's not professional trading. That's volatility. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluate your consistency over time. Traders who show long-term balance are the ones who get scale up, who get features, who get trusted with more capital.
Alright, so let's address the number and what's an acceptable profit consistency ratio.
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit.
So if you make a $5,000 total, your biggest single profit day should not be more than the $1,000. If it is, you will need to keep trading slowly to bring that ratio down.
So let's say you are over the limit. Don't panic, you are not disqualified. You just need to keep trading and even out the curve.
Here, how to do that. Trade smaller size for a few days. Take smaller control win for the 200, 300 day. Avoid big swing trade that could spike your ratio again. Spread profit across multiple days, not one monster startup.
And for those using Expert Advisor, monitor your equity curve. If your EA is skewing profits heavily into one day, you might need to rebalance it. The bot might be profitable, but it won't pass this rule unless it's configured with payout logic in mind.
So let's talk about some common mistakes to avoid. Mistake number one, traders hitting target early, then taking the rest of the week off. That inflate your best day and leave the rest of your curve flat.
Mistake number two, overtrading after weekday, thinking I'm safe now, I'm trying to squeeze more instead of averaging out that high ratio.
So mistake 3 is thinking this rule is just a hurdle. No, it's not. It's a reflection of what we actually look for our master traders.
At the end of the day, this isn't about controlling you, it's about the building habit that can handle scale. If you can be consistent with $25,000, what happens when we whip you the 100,000 or more?
Exactly, consistency is what makes you safe to invest in. At WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you are serious about long-term trading.
And we've seen it in time and time again. The traders who respect this rule were the ones who get multiple payouts, referrals, and grew into six-figure funding accounts.
So don't fear the rule, understand it. Use it as a feedback tool. If your ratio is too high, great, that means you've got profit. Now keep going, balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculate your profit consistency ratio automatically. You can check it anytime under your statistic tab.
So to recap, this rule is about balance, not volume. Aim to keep your bet size under 20% of your total profit, spread your wins across multiple sessions, and monitor your progress in the dashboard. And coming up next will be diving into scalp runs and how consistency like this exactly what leads to more capital, more trust, and more profit share.
So if you're ready to turn a $10,000 account into a $100,000 at once without even changing your risk profile, don't go anywhere.
This is where the reward kicks in.
So let's continue. You're watching the official WeMasterTrade live stream where performance meets structures and discipline builds real opportunity. So we have worked through a daily loss limit, tackle the maximum total loss, and examine how your profit consistency will shape your long-term pay and grow. And now we arrive at the final, perhaps most overlooked rule level. So the risk consistency rule, or what we call the discipline test.
That's right, traders often think the biggest enemy in the market, but truthfully, it's inconsistency, especially in how much you are risking from one trade to the next.
This rule doesn't look at how often you win, it looks at how stable your risk is and how professionally you manage your position sizing. And if you're serious about scaling at WeMasterTrade, this rule is non-negotiable.
And let's break it down as its core risk consistency rule is simple. You're not allowed to lose more than 2% of your initial balance on any single trade idea.
And that includes all losses associated with that trade idea, both closed losses and floating losses. Even fees, commission, and swap are counted.
And for some accounts like the 510 OBC package, this rule gets even stricter. There the limit is 1% per trade ideas, not just 2%.
True, because the consistency isn't just about the outcome, it's about the process. The more erratic your position sizing is, the more volatile your equity curve becomes, and it makes you hard to scale.
This rule protects both you and the firm. It helps reserve capital, prevent last equity swing, and make sure your play out over time.
Think of it as your account's heartbeat. If your position size pulses up and down, 0.5% loss per day, 5 loss the next, the system flags it. That's not structures, that's chaos.
And this is where it's going to get technical, but stay with us. A term trade idea is not just a single order, it's a group of trades that share the same logic.
And if you run trade by positioning gold at a different time and you close them within 3 minutes of each other, that's one trade idea.
Because it's the same symbol, same direction, and close around the same time, even if you open them at different times, they're seen as a single, unified position from a risk perspective.
So the system doesn't look at your trades in isolation, it groups them into logical bundles and applies the 2% rules across the entire bundle, right?
Yes, and once it's allowed, you can have a multiple separate trade idea as long as each one respects the risk limit.
For example, if you go long on gold, short on GBP, GBY, and short on AUD, USD, and each position has its own distinct direction and asset. Those are 3 separate trade ideas, and each one can risk up to 2%.
So let's say you go buy on gold and then you go buy it again, and then you have 3 open positions in the same directions on the same assets.
Yep, that system treats as one trade idea. So if the combined floating risk or eventual loss from the position is 2% of your starting balance, boom, you have broken the rule.
Another mistake is the open multiple go buy, then closing on 1 10 minutes later, and 2 others together. The system still group the trade close within the 3 minutes of each other, so be mindful of your closing timing.
So let's go hands-on. Suppose you have a 100,000 account. The 2% max rate per trade idea means you can't lose more than 2,000 on any single trade idea total.
So you open to go buy 1 loss each. You don't play a stop loss, new heads. Market drop the 100 pips and each loss 1,000 and that's 2,000 total.
You're right on the line. This slippage or swap as a few extra dollars, that's it, rule broken. Account flagged or liquidated depending on enforcement model.
And on some accounts, especially instant funding accounts, stricter tolerance, this breach may result in lots of fund stats or immediate closure.
So some pro tips to stay risk consistent. Tip 1. Set your loss size based on account risk, not emotion. Know how many pips equal to 2%.
Tip 2. Use stop loss order religiously. Set them based on risk per trade idea, not random chart level.
So tip 3, don't track trades without calculating combined risk. Just because one position is below 2% doesn't mean 3 of them are.
Tip 4. Label your trade ideas mentally. If you're entering on the same setup, treat it as one. Size it accordingly.
Tip 5. If you want to split an idea into multiple and try, do it smart, scale in a smaller, use micro lots if needed, and keep the total exposure below 2%.
Talking about some common violations, the most common reason traders break these rules, stocking multiple entries on one trade idea thinking is still separate.
The second, opening high-risk trade after win, assuming they playing with the house money. Spoiler, the market doesn't care.
So third, neglecting floating loss, and the trade may not be closed, but the floating bet still counts towards your 2% risk.
And why we enforce this rule? This isn't just policy, this is a professional practice. Hedge fund followed it, bank followed it, and real trader followed it.
Exactly, we're not here to micromanage you. We are here to protect your account, our capital, and the integrity of this community.
So, and traders who internalize this rule, who understand that small, consistent risk is the foundations of scalable capital, those are the ones we grow, and those are the traders who go from $25,000 to $1 million.
And if you want to be a professional trader, you have a team like one. And professional trader always know how much they're risking on every day, every trade.
And if you're still guessing your lot size, you are opening trades because the setup feels right. Take this as your sign, step it up, get structured.
And this is more than a rule, it's a habit. Build it now, and the path to bigger capital and larger payouts become way more predictable. And that, my friends, wraps up the 4 essential rules of trading at WeMasterTrade: the daily loss, maximum loss, profit consistency, risk consistency. And master these, you're not just staying compliant, you're building a foundation for serious capital management, long-term payouts, and scaling.
Coming up next, we will dive into the Scala plan and how to help pass all these rules, move from starter account to 6 and even 7-figure capital allocation.
From $10,000 to $1 million, it's not magic, it's consistency, discipline, and a system that rewards both.
You're watching the official WeMasterTrade live stream, and the best is still to come. So this is it. You made it through the risk rule and the profit conditions and the structures of our accounts. And let's talk why it's all worth it, because at the end of the day, we know that every trader really wants
More capital, more room to trade, bigger loss, higher reward, without ever putting your own money at risk.
And that's exactly what the WeMasterTrade Scale Plan is built to provide. This is your roadmap from being a small account trader to managing a $1 million funded account, and it's not fantasy, it's a clear path with defined milestones.
So the Scale Plan is our performance-based growth program. As you trade well, meaning hit your target, avoid ad violations, and demonstrate risk control, we increase your capital allocations. In other words, you earn more room to trade without spending more out of the pocket.
And let's be clear, this isn't tied to subscription model or remake. You don't pay for scale up, you earn it through consistency, profit, and discipline.
And the scaling is aggressive. We are talking doubling, tripling, and eventually scaling you on the way to 1 million in funded capital, depending on where you start.
So at WeMasterTrade, we offer 2 types of scale plans depending on your account size. First is percentage-based selling, also used for chart accounts, and second is amount-based scaling, using instant funding accounts like 10, 25k, and 50k and beyond.
Let's start with the percentage-based plan. You begin as an evaluation trader level 1 with 100% of your base account. Hit the 20% profit target with profit consistency, and you promote to level 2 where your capital increased by 50%.
And from there, the growth explodes to 300% at level 3, 600% at level 4, at level 5 the percentage is 1200%, at level 6 is 2400%, and finally the maximum allocation is $1 million.
And for each level, you don't just need to hit the perfect target, you also need to complete at least 2 payout cycles so the system knows you're not just performing, you're stable.
And now for the instant funding account, the scale of work with the set dollar target and the plan adjust depending on your initial funding size.
So let's take the 10,000 funded traders as an example, and here's how the level look. At level 1 is $10,000, $15,000 at level 2, $30,000 at level 3, $60,000 at level 4, at level 5 is 120,000, 240,000 at level 6, doubling it, which is 480,000 at level 7. At level 8 it is 960,000 and 1 million at level 9.
So its statements that are perfect target usually 10 to 20%, and some levels require perfect consistency, especially in the early stages. When you go beyond level 3 or level 4, the consistent requirement drops and it becomes all about your performance and discipline.
And if you start with the 25,000 account, your first profit target is 5,000. Hit that with consistency, you bump up to the 37 and 5 and then the 35,000, and then 150,000 and all the way to 1 million.
And don't worry, you don't lose your account if you don't hit the target fast. There are no time limits. You grow at your own pace as long as you stay within the rules.
So to move to the next step, here's what you need to do. Reach the specified perfect target, avoid all violations, especially MAT laws of daily laws, complete at least 2 successful payouts, and maintain perfect consistency if required for that stage.
Once all conditions are met, we issue a personalized trading agreement and upgrade your account size.
And the best part, with a bigger account you are earning more without increasing your risk per trade. That's real capital leverage. So let me be real for a second. The most common mistake, overtrading towards the target. Traders push too hard trying to scale fast and end up violating drawdown.
Another one in ignoring consistency in the early narrow. If you make the 80% of your profit in one day, that payout won't qualify and you need to spread your win.
And of course, not planning your growth, you should know when your next scale target is and trade in a way that prepares for it. Don't just trade for today, trade for level 7. And now we're going to enter the economic analysis.
Okay, wait a second. Big day today with the floor of PMI data out of the Europe, the UK, and the US. You got a wrap here with me to break it all down. Ready, wrap?
Absolutely, Helen. Let's jump into it. PMI days like this give us a great read on global economic momentum, manufacturing and services especially.
For the first event at 12:50 p.m., France flat PPI. Start with the France manufacturing PMI come in at 48.9, slightly better than expected. Surveyed at 47.7, also a talk above for the car.
Right, but both still below 50, that's signal contraction. The key takeaway, Brent is still cooling but not collapsing. So Euro bonds are thrilled, but they are not panicking either.
Exactly, it's a less bad kind of result. Market reaction a mule, but Euro USD held steady. For the next events at 2:30 p.m., German flat PMI. Now Germany number were the real surprise. Manufacturing jumped up to the 48.8 from the 44.5. That's a massive improvement.
Totally agree. While still technically contracting, this rebound is significant. It's a sense German industry is stabilizing, maybe even bottoming out.
Soviet had 48.6 also up. The both sectors low up to the 50. Germany is show sign of turning a corner. This definitely help put euro pair higher intraday.
And at 3 p.m., Eurozone composite PMI in April. Eurozone-wide data followed the German trend, manufacturing 49.2, up from 45.7, services 50.4, backing expansion.
And let's not forget the German info business climate, which come in at 87.4, better than expected, but still below last month. Sentiment is shaky but improving.
Exactly. If market see consistency in this trend, ECB rate cut bears might get pushed back a bit.
The next event at 3:30 p.m. UK flat PMI. Let's hop over to the UK. Manufacturing at 46.2, better than forecast, but down from April 49.1. Service house at 50, barely clinging to expansion.
So again, mixed signal. Manufacturing is slowing more sharply while services stabilize. This won't give the POA a strong case either way, so GBP might stay in a choppy range.
Agree. GBP USD didn't break down. Traders are waiting for clear direction from the BOE minutes on inflation data.
And at 7:30 p.m., U.S. unemployment claims. Now jumping to the U.S. claim ticket, just slightly to 230,000, right in line. Nothing dramatic, so market didn't react much.
At 8:45 p.m., U.S. flat PMI. Here the waiting get interesting again. Manufacturing dips to the 48.8 back in the contraction. Service stays solid at 51, but down from the 51.3.
Mixed bag, manufacturing weakness might spook equity market a bit, but the services sector remains the backbone of the U.S. economy.
And don't forget the combo kept the Fed in a holding pattern, no urgency to cut or hike.
And the last one at 9 p.m., U.S. existing home sale. This was a nice surprise, 4.50 million units sold, beating last month's 4.02 million. Housing is holding up despite high rates.
That's right, it's a subtle sign that consumer resilience is still here. Good for USD strength going to Asia session. That's all the news for today.
So, thank you all for joining us today. We hope this session has been informative and so you're as excited about the opportunity of WeMasterTrade as we are. So remember to like, subscribe and share the live stream with others who might benefit from it. And don't forget to follow us on our social media platforms for more updates, promotions and trading tips. Stay tuned for upcoming events and we look forward to seeing you again soon. Until next time, happy trading!